Can you trust the RSI indicator? Hundreds of strategies and stock alerts rely on the RSI indicator. The overbought or oversold signal that RSI produces presents long and short entries for many strategies. But how accurate these signals are? Can you trust every time the RSI indicator produces an overbought and oversold signal? I have collected thousands of data points and performed data analysis on different aspects of RSI and the corresponding price action. Let's find out if the RSI indicator can be trusted for your trading strategies. I am not going to bore you with details about RSI. If you're watching this video, I'm sure you know what an RSI indicator is. Of course, if you are a long-time investor who invests in the stock market and afford to wait 20 years, no indicator matters to you. Over time, everything evens out. But here, we are talking about the day or swing trading. We start our analysis with the Tesla stock price at the 1-hour chart. For our analysis, we are working with more than 2,500 data points. After our initial analysis, we will look at how well the analysis generalizes across different time points. In the end, we will also compare the analysis with a broad market index. One very important thing to note is that this analysis is highly dependent on the time of the market. In a bull market, the analysis may produce very different results compared to a bear market. Now let's start with the analysis. The only thing we need to know about RSI is when the RSI value is 70 or above, the market is considered overbought. And when the RSI value is below 30, the market is oversold. But can you just assume that only 70 and 30 are the magical numbers that indicate the market state? What if the RSI value is 69 rather than 70? Can you say the market is not overbought? In this plot, we are showing from our data how many times we see a certain RSI value. For example, we can say from this plot that in our data, we see RSI value of 50 more than 80 times. The plot also makes sense. There are few accounts of RSI values that are very small, such as less than 20, and very high RSI values, such as more than 70. Most of the time, the market is not seriously overbought or oversold, rather, the price action stays in between overbought and oversold regions. Now back to the RSI values of oversold and overbought. An RSI value of 30 or below definitely indicates the market is oversold. But what about an RSI value of 33 or 34? From our data, there are a lot more data points with RSI values of 33 and 34, compared to 30 or less. Should we not consider the market oversold? How about 64 or 68? Is the market overbought at these RSI values? Next, the question we are exploring is if we make a short or long entry based on RSI value, how many times the trade is profitable, and how many times the stop loss is triggered in the next 5 bars. So, for our data, how many times do we see the trade is profitable within 5 hours of the entry? Here 5 is an arbitrary number, and it can vary based on your risk tolerance. At the lower profit target, both long and short profit count is higher. As the profit target increases, the number of profitable trades goes down as well. But more importantly, at every point, the number of stop losses is much higher than the profits. So instead of 5 bars, what if we increase the number of bars to see the trend in profitability? Overall, the long trade profit stayed relatively the same over different numbers of bars. That means, whether you wait for 5 hours or 15 hours, the percentage of profit from the long trade stayed the same. However, the short trade showed an increase in profitability with a longer wait. Only 15% of short trades are profitable within 5 hours of a trade, but the percentage goes up to more than 35% when a short entry waited for 15 hours after the trade. Once a trade is made after the market is overbought or oversold, how long does it take for those trades to reach the profit target of 5%? Both for the short and long trades, most of the time, the trade reaches the profit target within the next 1 to 10 bars, which in our case, is 1 to 10 hours. This chart ignores any stop loss. That's why some of the trades go to the profit target after 400 hours, which is unlikely, and should trigger stop loss long before that. RSI-based strategies are triggered when the RSI value reaches above 70 or below 30. This is the window for entering a short or long trade. But how long does the RSI stay above 70 or below 30? If you enter a trade right at the moment when RSI hits overbought or oversold, but then the price stays above or below the range, you may encounter a losing trade. Although the chart shows, most of the time, the RSI does not stay overbought or oversold more than 1 or 2 bars, there are times when RSI stayed above 70 and below 30, more than 6 to 12 bars. Any strategy that expects the price to change direction based on RSI values could face potential loss in such cases. The next question we ask is, how long does it take to reach from an overbought region to an oversold region? Is there any consistency between them? One of the reasons to ask this question is to estimate a trade you may want to take in either direction. Here we calculated 10 instances of how many bars it takes to reach from overbought to oversold region, and vice versa. On average, it takes almost 40% longer to reach from oversold to overbought, compared to the other way. But this metric could very well depend on the overall market trend. All analysis so far is built on the 1-hour chart. But how do they compare when the time frame is different? Here we run a similar analysis on the Tesla stock at 30 minutes, 1 hour, 2 hours, and 4 hours time frame. For a short trade, the trade reach profitability the longer you wait, except for a 4-hour time frame, which surprisingly barely changes its profitability with a longer wait time. On the long trade, only 30 minutes chart shows any significant difference in performance over a longer wait compared to the higher time frame. On how long it takes for price action to move from overbought to oversold and vice versa at different time frames, interestingly, at the 4-hour time frame, it takes significantly longer to reach from overbought to oversold. In the shorter time frame, it always takes longer to reach from oversold to overbought region. Depending on what time frame you trade, this could help you identify when to expect to enter a trade in your desired direction. There are thousands of stocks in the market, and data from each stock is very different from any other stock. We just saw the results from Tesla stock. But how does it compare to other stocks? Of course, it is not possible to compare all of them, but we are going to compare some Tesla analyses with SPY in a 1-hour time frame. Compared to Tesla, SPY takes significantly longer to reach 5% profitability. And the trend is consistent for both short and long trades. For how long it takes the price to reach from overbought to oversold and vice versa, Tesla stock seems to take longer on average than SPY. So, does it mean that the price action in SPY moves quicker compared to Tesla? There are many other analyses one can perform with the RSI data. And comparisons between some other stocks could result in very different results. The idea here is to visualize how the RSI data can be interpreted, and how the seemingly simple RSI indicators can influence your trading patterns. Of course, no trading strategies are solely based on RSI, and this video clearly shows why that is. But even when RSI is playing its part in a strategy, can you really rely on its ability knowing all the uncertainties we have seen in this video? When we want to have an automated strategy, we need to decide upon some defined value, such as RSI of 70 or 30. But the point I'm trying to make here is how reliable it is to make a trading decision based on RSI overbought and oversold values. Remember one thing, RSI does not control the market. The market is not oversold because the RSI is 30, rather, RSI is 30 because the market is oversold. I hope this video helps you understand the RSI indicator better. Maybe this will help you think differently the next time you use the RSI indicator in your trading strategy. If you enjoyed this video, please leave a like, and any comments you have. Subscribe to the channel if you like to watch more of these types of content. Thank you for watching.